our fall outlook for fall of 2013. We do these outlooks on a quarterly basis. The first thing that we're going to do is actually look back at our 2013 summer outlook just to see how things actually rolled out versus our expectations at the time. Specifically, of those expectations, we're going to take a look back at the HTP or Hudson Transmission Project capacity factor, and then also take a look at the west zone congestion. This is probably the single largest point of interest in New York this summer, so it's certainly something that we're happy to walk you guys through. After that, we'll get into our expectations for fall of 2013. We have a number of slides covering demand, generation, and transmission, as well as our expectation of some price separation as a result of especially those transmission factors. So looking back at our summer outlook, initially our summer outlook had called for strong temperatures, weak precipitation. This summer was, needless to say, the tale of two very different periods. Both June and August proved to be well under expectation. Temperatures falling below expectations, as well as, especially in June, precipitation actually coming in above expectation. Now that is in stark contrast to the month of July, which actually gave New York a new all-time peak. So a very strong juxtaposition of different load segments there. The next piece that we had covered in our summer outlook was the retirement of Dunkirk and Genscape. This was pretty much in line with our expectation. The Genscape retirement really didn't drive all that much of a change to the overall market, whereas Dunkirk, again, was in line with expectation, drove greater congestion and higher pricing as a result in Zone A. The Hudson Transmission Line did begin commercial operation on the 3rd of June. The capacity factor was well under expectation, though, and we'll get into a little bit why we think that happened. Again, the expectation was met from the standpoint that it did begin commercial operation in line with our expectation and really the market's expectation of where that was going to come into the system. Just didn't necessarily have as much of an impact as we would have otherwise thought. We did see the return of the Neptune line to full capacity. This was bearish to Zone K and helped to reduce the Northeast Shore Road congestion. This is something that, again, was in line with expectation. The last point here, this elevated natural gas pricing. This was something that, coming into the summer, was maybe a little bit more of a NEPOOL driver than it was a New York ISO driver. But this was something that, across the Northeast, we were expecting to see a mix of just various factors on the pipeline, but the most important of which was the expectation of high temperatures and therefore a strong demand on the electrical system. We were expecting that to be able to drive higher pricing, especially on the AGT. With the exception of really the first part of June, we really didn't see all that much of an influence, and that really goes hand in hand with the fact that thanks to the rainy June and the relatively cool August, we really didn't see the gas pricing nearly as bullish as what we had expected. As you can see from our chart here, there's an awful lot of bearish boxes there, and this is pretty much across the entire ISO. Load in general, with the exception of the brief period in July, which actually saw that new peak set, load was generally bearish. As far as the generation, this was generally bullish. I would say the majority of the bullish impact was felt in Zone A. The transmission grid did provide, again, some bullish impacts. In A, it was the Huntley outage, and then the Ramco PAR proved to be bullish both for G and J. The gas was, we would call it neutral in A, really not much of an impact whatsoever. And then mixed for the rest of the zones. This is looking at it from the standpoint of it did show some strength in line with expectation over July as a result of the heat coming back into the system, but ultimately really didn't drive didn't have nearly as much of a bullish impact as what we would have otherwise expected. Finally, the imports. Looking at this specifically at A, the flows from PJM did prove to be bullish, and this is specifically because of their because of the way that they interact with that west zone congestion. With from the rest of the grid, they were generally bearish. This was especially because in G because of flows from New England throughout the summer. Again, with the exception of a period of time in July, flows were relatively healthy from NYPOL because they were seeing lower gas pricing and lower demand than expected as well. And for K, it was really the return of Neptune to full capacity that was able to provide some downside to the K pricing. So turning our attention specifically to the weather aspect here, like I mentioned in the previous slide, you can see from the graphics above, we had a record rainfall, or I should say near record rainfall for the month of June, and relatively cool temperatures. July, the outlier here, where we saw New York set a new peak of 33,956 megawatts, just edging out the previous record of 33,939 megawatts, which is from all the way back in 2006. In August, as you can see from the bullet here, we had relatively comfortable temperatures move into the region. As a result, we saw demand very bearish throughout that entire period. So moving on to the Hudson Transmission Project. The long and short of the question here, of course, is why didn't it run at a higher capacity factor or anywhere near the capacity factor that in general we and the market had been anticipating? The overall and the long and short of it is that while the line does come into J, the power coming in from or over the HTP line has proven unable to get into the proper load pocket. So while there is additional capacity for power to come into the J zone, into the city, that power does not seem able to get into the right part of J, and as a result, the load pockets in J are continuing to keep keep J congested, and really the HTP has been unable to have the downside impact on the JG spread, which we had been anticipating. So the next slide here, all we're trying to illustrate is one of the main reason why we're not seeing the capacity factor over the HTP that we would have expected, especially in comparison to an interface like Neptune. Looking at the chart on the left-hand side, you can see that the spreads between the source point for HTP, the spread fluctuates for the majority between -5 and 0, and 0 to -5. Take this in comparison to the spreads on Neptune, which are much more heavily loaded on the positive side, therefore providing much more incentive to flow into zone K, or into the New York ISO system, a capacity factor of near 71%. So as I had mentioned before, the west congestion really is probably the primary issue that was driving interest this summer in New York. And as you can see from this chart here, we are seeing we're seeing less congestion bind more often and for higher than ever before. This chart, what we're trying to show is at various demand levels, the amount of the difference between all pricing for Zone A in a year-over-year comparison. You can see how much wider and specifically how much higher the Zone A pricing got for periods of time in 2013. So a significant premium in comparison to the previous year. The Dunkirk Unit. These are supply stacks that we generate out of our model here at Genscape. We have all of the bid block research to back up what the stack would look like in Zone A. And as you can see, as more and more generation has been retired out of A, that vertical portion of the supply stack is moved further and further to the left, indicating pricing climbing at an accelerated rate at lower demand levels. The result of this, and as you can see from the slide here, was actually the second highest average. Sorry, not the second highest average. The highest average price for Zone A since 2011, at an average of $45. Again, the drivers that we think are responsible here: Dunkirk retirement, the Huntley to Elm Street work, and then the Ramco line actually would have impacted this as well. Perhaps the greatest question mark we have left really are the virtual plays. These are going to happen in response to pricing that the market's seeing as everyone works to find arbitrage opportunities between the zones as well as between the day-ahead real-time markets. Because of the load pocket that is driving price in A, because it's a limited area and there's limited generation inside, this makes it extremely sensitive to changes in virtuals, and as a result of that, we see what we've seen this summer with relatively high pricing. So moving on into our expectation for this fall, the weather really is about as benign as we could hope for it to be. The only above normal expectations, and keep in mind by above normal, this is at a period of time of the year where the temperatures have little to no impact on the load as is. So even in sections of the Northeast where we do expect some potentially above normal temperatures, these are outside of the strong load areas, mostly in the northern reaches of the Northeast. So this is not something that we would expect to have any kind of significant impact on driving load. The next thing we looked at were the expectation of generation expected to be offline by date. This curve is relatively in line with what we would expect from a normal fall, with the majority of outages planned for the month of October. This is in response to the risk of summer extending itself and seeing load risk to the upside as a result of higher temps in September, and then the risk of early winter setting in and seeing load risk to the upside at the end of November in response to cooler temps moving in more quickly than anticipated. The only other major point that we wanted to make as far as the generation being offline, there are no anticipated nuclear refuelings this fall. This is obviously a generally bearish signal. It should be said that for both regions, we're certainly not saying that there is no price risk associated with the coming outages, but it is something that that generally speaking is a bearish factor in comparison to other years. As far as retiring generation in the NYISO system, the Syracuse unit in Zone C, this had began commercial operation in 1991. This has really been impacted by the lower natural gas pricing. This is expected to retire at the end of September. We don't expect this to have much of an impact. This isn't something that we would expect to impact the high pricing in Zone A. So this is not something that we expect to see much of a change to the system as a result. Now, the Orangeville Wind Farm is 94 megawatts and is expected to come into service September 2013. This does interest us a bit more because this would be inside of that load pocket in Zone A. The complexity here, of course, is that as a renewable energy resource, we don't expect this is going to have much of a downside impact on the day ahead. So this is something that while it could impact the real time to the downside, it is not something that we would anticipate as a bearish factor for that west zone congestion. So this is something that that while important in the real time, we do not expect to have a significant impact on the dam. Now, as far as planned transmission outages, this is by no means an exhaustive list, but we tried to go through and pick out a few of the outages that we felt as though would be important to this time period, and also outages that were of significant enough length that we thought would be good to bring up in this conversation. The first that we have highlighted here is the Huntley to Elm Street. We anticipate that this is going to prove to be have a bullish impact on Zone A, again because of that west congestion. This is going to limit Huntley to 200 megawatts, and this again is something that will further limit the available generation inside of that load pocket. Again, create additional volatility by further restricting the supply stack inside of Zone A. The next one that we have highlighted down the list here is Branchburg Ramco. This is something that derates the Central East. We don't think that that this is going to have this wouldn't necessarily have as much of an impact as it would in a higher demand period, but it is certainly something that that we wanted to keep track of because it does have an upside impact on G and K, or I should say G through K. Looking more closely at some of the outages that are going to impact the Central East D-rate. All in all, again, we don't anticipate this is going to be the driver of a tremendous amount of Central East congestion. There are ways to alleviate this, especially especially as a result of additional flow out of NEPOOL. NEPOOL is again the majority of the generation there is gas-fired. So unless we see an unusually high push on the gas pricing inside of NEPOOL, flows out of New England into New York should help to alleviate any bullish behavior exhibited by the Central East. The last one I wanted to mention is this Branchburg Ramco. So this drives conversions between Keystone and Zone A. This impacts the flows from the PJM AC. This is a generally bearish factor to those flows. You can see from the chart here, looking back at different periods of the year, just how much of an impact that this work can have. So this is something that, again, we think will have a moderating impact as far as the flow from, or will actually cause flow out to PJM in some cases, if not just leaving that interface flat. So in summary, as I mentioned before, the lack of nuclear outages in both New York and New England is a generally bearish signal. Certainly, we do have a number of various other fuel sources that we are expecting to see outages on. So it is not that we don't expect any upside impact as a result. It's simply that the lack of those nuclear outages would drive us to believe that it's going to have a generally bearish impact on the pricing overall. Now, as far as the generation that we had mentioned previously, that the wind farm coming into Zone A could increase the volatility of the DART in Zone A because of the fact that as a renewable resource it is likely to not impact the day ahead and potentially provide some downside to the real time. As far as the imports are concerned, our primary concern would be around the Branchburg Ramco outage, limiting the exports in from PJM. As far as transmission, we're generally bearish on the Central East congestion, as I had mentioned, because of the Moses South D rate, the likelihood of the continuation of the West Zone congestion, gas pricing, which would primarily impact the flows in from New England, and finally, just that Branchburg Ramco outage would again have a bearish impact on that Central East constraint. Ultimately, load again is not providing us any interest either. The above seasonal anomalies are likely to be outside of the load heavy areas. So all in all, we're looking for a fairly quiet fall here in New York, and really for the Northeast as well. Now the last few days in NEPL certainly seem to be in stark contrast to that. But we do think it is something that, at least on the New England side, is unlikely to continue past this week as a result of the demand falling further down. So that's everything that I have for you this afternoon. Please feel free to hit us with any questions you might have. I'm happy to follow up or answer the questions if I can at the moment. I'll take just a brief break so that you guys can enter in any questions you might have, and I will be back with you momentarily. All right, everybody. So really just one question came through, and that was in regards to the flows over the HTP. Would we see an increase in capacity moving forward? Our answer right now is that we don't believe so. Until there's sufficient transmission built that the power over the HTP can reach the load pockets in J that need to be pushed down. I don't think it's likely that the spread will show the increase that we need it to, and as a result of that, I think it's fairly unlikely that we see that capacity factor pick up. All right. Just two more points. One, we will be emailing out a link to the recording of this presentation. We also will be providing you with the slides as quickly as we can. Finally, just a plug for our New England Outlook, which we'll be doing tomorrow, September 12th. I actually put in the wrong day there. Don't be fooled. Tomorrow is Thursday, thankfully. If you do have any questions, please feel free to follow up with us. And again, just thank you very much for joining us. We hope we'll find this helpful, and we hope to see you back tomorrow for the New England.